What's up, you guys? I'm Dan, this is Frugal Not Cheap, and today we're talking about Bitcoin. Max, you're so silly. So for those of you who don't know, my name's Dan, and I run a commodity derivatives trading book for a small proprietary shop, hedging our risk on NYMEX using futures and options. My background is in economics, and I've been really into personal finance since my first full-time job, which is in between undergraduate and grad school, where I worked at a nonprofit credit counseling firm. A friend of mine recently asked me about Bitcoin because a friend of hers was thinking about buying some and wanted to hear my thoughts. I basically told her that it would be a gamble, and I pointed her to some other resources to learn more. But it got me thinking, and so today what I'd like to do in this video is flesh out what I think I know about Bitcoin and what my view currently is. As in anything, I could be wrong, and we'll be only covering some of the surface level stuff. We won't be diving too much into the nitty-gritty, but I think the things that we'll touch on today will be enough to give you a really good idea, and so I'll do my best to explain. So first, let's talk about what Bitcoin is. Probably isn't a great idea to be buying an asset that you don't understand. Bitcoin is a digital currency invented in 2008 by a person or persons going by the name Satoshi Nakamoto and launched in January of 2009. This digital currency is different from fiat currencies in the following ways. 1. It's decentralized. It's not issued by any central bank. The whole thing runs on a peer-to-peer network. Think about Napster or LimeWire or Winamax back in the old days. With fiat currencies, central banks can adjust the size of the monetary base, and by doing that, they can influence interest rates, so they can have some effect on the economy in the short run, or they can also cause a devaluation in order to make it easier to pay back debt. But that's a risky proposition if you look at the Weimar Republic and more recently Zimbabwe. In any case, with Bitcoin, there is no central bank. It's completely decentralized and international, and also open source. 2, Bitcoin is opaque. While the peer-to-peer network is leveraged in order to provide processing power for the ledger of transactions until this ledger is public, who is involved in these individual transactions is very much not public. In fact, the Bitcoin wiki itself promotes this anonymity in 3 out of the 6 different points that it has. The wiki says that they're permissionless and borderless, so they can happen across countries and no one can stop you. They do not require any kind of identification, so can be done completely anonymously, and they're censorship resistant. There's no overarching body that can stop these transactions. Because of this, Bitcoin was the only accepted payment method for the famous Silk Road black market website where you could buy drugs and all kinds of different illicit items. And Bitcoin remains the top choice for trade in illicit goods. If you're a drug dealer or an arms dealer, it's a pretty attractive choice. There are nodes in the peer-to-peer Bitcoin network that verify transactions using cryptography. Cryptography, of course, is the use of codes. Think of like the Enigma code back in World War II. But of course, codes nowadays are much more complex because of the vast amounts of computing power that we have now. In any case, because there is encryption involved, that's why Bitcoin is not only known as a digital currency, but also a cryptocurrency. So the technology behind Bitcoin is pretty cool. We've got a peer-to-peer network, so it's decentralized and there's no individual point of failure. We have cryptography behind the transactions, so there's some security there, and it's very hard to tamper with the ledger. And we're able to transact in Bitcoin anonymously and across international borders. But is Bitcoin any good? Well, the answer to that question really depends on what a thing's purpose is, right? Something must be good at something. And there are 2 ways that we can look about Bitcoin. First is what it's primarily designed to do, and as the name implies, it's Bitcoin, and it's meant to be a currency. So let's assess whether or not Bitcoin makes a good currency. Any currency, any money, is a store of value. In other words, I put in my labor at work, in return I am paid in dollars, and these dollars hold value that I'm able to use in order to purchase goods and services in the future. And it's not a great store of value if the amount of purchasing power that I have with those dollars is fluctuating wildly all the time. And unfortunately, Bitcoin in that sense is a terrible store of value. It is very convenient and easy to transact with, but its value fluctuates tremendously. It is not a good store of value when I put in $100 into Bitcoin one day and the next day I only have $75 worth. Or even the other way. As long as we have that kind of volatility, it's just not a good store of value. What you want is consistency. On a typical day, you might see the US dollar index, which is an index of the value of the US dollar against a basket of foreign currencies. This thing might fluctuate maybe 0.3% to 0.5%. But what you're seeing in the daily fluctuations in Bitcoin are much, much larger. A 5% or even a 10% daily move in Bitcoin valuations is not at all uncommon. Volatility over the course of 1 year for Bitcoin, so this is price volatility, a measure of how much it fluctuates, has been running higher than emerging market currencies, which can be quite volatile, also real estate, equities, and until recently, because the pandemic made things go haywire, even oil. And because no country uses Bitcoin as its home currency, you're going to feel the impact of these changes in valuation of Bitcoin on a day-to-day basis, no matter where you are. On the other hand, take the case of the US dollar. Even though the US dollar index may fluctuate to some degree every day, and again a much smaller degree than Bitcoin, my actual purchasing power with my dollars within the United States isn't really affected by the currency exchange. My dollar has basically the same purchasing power day to day. Over the long run, of course, there is inflation, but on a day-to-day basis, you really don't feel it. Well, you might be thinking, what about a place that has hyperinflation, like say Venezuela? You might be tempted by Bitcoin as an alternative. But there is another alternative, which is nice and stable, and that's dollarization. In fact, some 60% or more of transactions in Venezuela are now run using the US dollar, many of them using a piece of software that the major banks got together to provide, which is called Zelle, which also allows for peer-to-peer payments. This has become very popular in Venezuela since the Bolivar tumbled in value back in 2018. What about the security or ease of international transactions? Is that really a selling point for Bitcoin? Well, I don't know about you, but I've never really been concerned about security or anything like that about any kinds of transactions that I've made using dollars. For instance, I send money to my friends using Venmo or PayPal, I make payments using those. Engaging in international wire transfers, I've never been worried about whether or not the money is going to get to the other side. And over time, even those international wire transfer fees have been falling. Even though there's been some press about Bitcoin being used to facilitate these international transfers, say remittances to family back home, very much the largest volume of Bitcoin transactions are all just done on the exchange. They're not really used to pay for goods or services or to transfer in this way. This is actually an area though where I think this kind of technology or this kind of an idea has some potential. And the most promising version of that I saw was Facebook's Libra cryptocurrency. This would be, again, a decentralized currency that would have various nodes. But the key difference here is that whereas Bitcoin is not tied to any basket of currencies, so the value can fluctuate however it wants, the Libra currency would have been tied to or benchmarked to a basket of currencies, providing that kind of stability that would make it useful as a store of value, as money. However, the decentralization thing is an issue. You see, Facebook, which also owns Instagram and WhatsApp, has a huge global reach. The user base is extremely large. And if you had this entire user base switching over to this global currency, essentially a replacement for global currencies, even though it's benchmarked to individual country currencies, this would take away a whole lot of power from central banks because they'd no longer be able to impact things using monetary policy the way that they can now. And therefore, it's no surprise that Facebook's Libra efforts have been stymied. Anyway, back to Bitcoin. The other issue is acceptance. A country's currency is generally accepted for transactions anywhere within the country. It's ubiquitous. Well, that's not the case for Bitcoin at all. It's pretty hard to go over to my local Walmart and pay for things using Bitcoin. There are other issues which would be a lot more involved if we got into them, but briefly I'll mention there's a scalability problem with the blockchain, the ledger of transactions, and there's also the issue of the reliability and security of the cryptocurrency exchanges themselves. But in the end, I think we can see here that Bitcoin kind of sucks at being money. So what about Bitcoin as an investment? Well, let's look at how Bitcoin is valued. As with any other asset traded in a market, the value of Bitcoin is determined by supply and demand. Let's take a look at supply. Bitcoin's supply is generated by a process called mining. Because it is a decentralized peer-to-peer network, you can't rely on any individual machine to provide the processing power to keep things going and add to the ledger of transactions to the blockchain. So the way that this was addressed in the architecture was to provide an incentive for users to offer computing power to the network, and in exchange for providing that power doing this mining, they would be rewarded with Bitcoin. So people offer their computing power to verify and update the blockchain, and in return they mine some Bitcoin that they're provided in what's called a coin-based transaction. So each time that someone earns such a reward, is able to mine some Bitcoin, then the Bitcoin supply increases slightly. Over time, the difficulty level required to mine increases, and the reward, the amount of Bitcoin that you're able to mine, is cut in half for every 210,000 blocks in the chain. So this sets an upper limit on the total supply of Bitcoin at 21 million. And we're approaching that limit of 21 million. We're up over 18 million as of this filming. But because the rewards are cut in half for every 210,000 blocks, then what you end up having is a logarithmic function where we're going to approach that limit, but more and more slowly over time. Now, each time you mine, you need to provide some proof of work. And again, that proof of work, the difficulty involved in showcasing that is increasing over time. And so this means we have to have greater computational power over time as well. So in the old days, at the beginning, you had a lot of users using graphics cards, which are better than CPUs at running the algorithms required to provide proof of work and to update the blockchain. But then later there were some specialized chips developed, and now there are some pretty big enterprises where you've got sort of warehouse-sized spaces with banks of specialized machines involved in mining Bitcoin, and of course consuming tons of electricity as well. It's actually kind of a crazy thing. And so what we have then is a fixed amount of supply at any given point in time that's slowly growing, and will be growing more and more slowly as we approach that 21 million limit. And so supply is growing at a very predictable and predictably slowing rate. So the only factor left to determine the value of Bitcoin is, of course, demand. We've already determined that Bitcoin isn't really much use as a currency. The vast majority of Bitcoin transactions occur on the exchanges, where basically people are just trading Bitcoin. As with the Dutch tulip mania in the 1630s and the South Sea Company bubble in the 1700s, more recently the Japanese real estate bubble in the 80s, and here in the US, the real estate and mortgage-backed securities bubble, people love piling on an asset that is quickly appreciating. And the word gets around and more people pile on, and it becomes a self-fulfilling prophecy where more and more buyers come in. Sometimes they get leveraged in order to buy even more, and prices can spike very, very sharply. But in the end, the bubble pops. There have been a number of Bitcoin price spikes throughout the years, but the largest of these occurred near the end of 2017. And we haven't seen Bitcoin valuations like that until recently, as of the time of this filming. Bitcoin is probably enjoying a lot more popularity right now because the pandemic has incentivized cashless transactions for one, and because some big names have made a foray into Bitcoin as well. Square, you may know them from their Cash app, has bought up a ton of Bitcoin, and PayPal is now offering to store Bitcoin on their platform as well. So when you go to buy something, you can use your Bitcoin, which is then converted into dollars though, and then you can use those dollars to buy things. So it's not a direct Bitcoin to goods, it's a Bitcoin to a currency to goods. But anyway, PayPal has moved into the space, and that's probably raised a lot of popularity. There's also some firm out there that's selling Bitcoin as the next gold, whatever that means. We'll definitely talk about gold more in a future video as well. But anyway, Bitcoin has become very popular of late, and so valuations were rising quite sharply, back near some record highs as of this filming. However, highlighting how bad it is as a currency, not a week went by since my friend had asked me about Bitcoin that I read a headline that the Bitcoin value had fallen 12.5% in a single day. And if Bitcoin never really takes off for actual day-to-day transactions, then all that's really left is trading it as a speculative asset. And then you might ask, what's so special about Bitcoin? What makes it different from other cryptocurrencies that are out there? There are dozens of competing cryptocurrencies. Highlighting this point, PayPal itself is not only allowing you to hold crypto, they of course are hedging their bets, and they allow you to hold 4 of the largest cryptocurrencies. You've got Bitcoin, then also Ethereum, and Litecoin, and Bitcoin Cash as well. So I think a global digital currency would be an amazing thing and a unifying thing. And I did have some hopes that Libra could be that currency, as Facebook and its partners had addressed both the scalability problem and also the volatility problem. But Bitcoin, as it currently stands anyway, it could evolve in the future, or it might not, I don't know, does not make a good currency. Nor do I think Bitcoin is a good long-term investment. What I think it is a speculative asset, something you can gamble on. And with such an asset, when you're hearing everyone talk about it, you might think of Warren Buffett's quote, to be greedy when others are fearful, and fearful when others are greedy. I sincerely hope that this video was helpful. Thanks very much for watching. What are your thoughts on Bitcoin? Let us know in the comments below. If you like this video, hit the like button. If you'd like to see more videos about finance, investing, financial independence, and travel, hit the subscribe button and ring the notification bell icon if you'd like YouTube to let you know when new videos are posted. Thanks very much for watching, and I'll see you in the next video.